Welcome out to another Trading Justice podcast. JD Vance just a few minutes ago said basically shutdown is on. We'll talk about the shutdown, the historical shutdowns we've had. We've had a lot since 1980 when shutdowns first became a thing. We're going to break that down, why markets behave the way they do when shutdowns are a thing. But before we get into that, and some amazing tidbits from my brother from his technical analysis piece as we head into the week. Talked about it in the lounge today. I find it the probably most important one tidbit to base your trading on this week. Pick Matt's brains on that. But that lounge I referenced, that newsletter I referenced, and that we'll talk about it all comes from Tackle Trading, who sponsors this podcast. It's an amazing community, one I have just genuine pride of being a part of. Love the interactions every day. Matt, this community, which you created many years ago, keeps going strong. Always a good time to come give it a shot, see what it's all about, isn't it?
You'll love it when you do it. Becoming a pro member of Tackle Trading, becoming a part of this community, embracing the application, education, and community is a beautiful thing. And we love new members. We love new traders, and there's nothing more than we love doing than teaching new traders how to navigate the financial world like a great trader does. And so if you are looking for a community to call home and you want to get into some education, application, no better place than Tackle Trading. You can get a free trial just simply by going to tackletrading.com, or you can hit the link in the description below and sign up for a free trial of the Tackle Trading Pro account.
Yeah, absolutely, Matt. That newsletter that you write, and I was starting to pay you some compliments in our pre-podcast, and I'm like, I'm going to shut up now. I'm going to save them for the podcast.
He doesn't love paying me compliments, by the way. This is
Not always, no, like not
he doesn't
always,
like doing
but
this.
but though if you do one thing right, and you do more than one thing right, it is technical analysis. And I key off as a trader the important tidbits from the newsletter that you write. I read it as a consumer. And I thought and Frank and I talked about this on the trading lounge this morning, the first retracement test, the higher low, the confirmation of a retracement. I find that, and we're going to talk a lot about the shutdown, and we're going to talk a lot about the jobs, and we're going to talk a lot about other things. I find that to be the most important thing for my trading this week. Why is that the case?
Well, there's always going to be a lot of conversations in the market, right? And obviously, this week we're going to get inundated with government shutdown and politics. And typically when that's the case, it's hard to get a vitally great read on the market, how the market's digesting that. To me, the technical read is the only thing that matters here. It's the only thing that matters. I don't necessarily care. Don't get me wrong. I would prefer not having a shutdown. I would prefer just having a beautiful technical story playing out in the market. I would prefer not seeing the unexpected volatility that could come from the uncertainty, because that's where volatility really lives, is in uncertainty. And you can't say a government shutdown isn't uncertain. There's obviously and we'll talk about this here in just a little bit, but you can't say it's uncertain. You can say a lot of different things. You can't say uncertainty. And so injecting that uncertainty into the market, I'm hoping, where I do believe we ultimately do get a shutdown, but I'm hoping for a quick resolution after that.
We
And
better get a shutdown for at least 4 minutes. I bet it on Polymarket.
I know you did. I know you did. You laid that odds today on
I did. Well, I know it was over the
Polymarket.
weekend.
Hey, it's 86%. You can go get pick you up
I
some.
got 65%, bro.
There you go. You got it early. You got it before JD Vance's commentary after the market closed then. But my point is, to me, the underlying technical story is a very, very compelling one right now. And the reason I say that, if all you ever do is come to the newsletter one time and you read the Tackle Trade newsletter and you read the technical update, you'll get value out of that technical update. There's no doubt. I try to teach concepts every week. I try to teach those concepts that are applying in the market this
Yep,
week.
you do.
And that's what I try to do every week. But if you check into the newsletter every single week, you will see that I tell the technical story over time. And what I feel about the market right now is pure technical. And the reason I say that, Mark, is we are in the midst of an epic long-term run here. Um, Ever since the recovery began on the weekly chart, it's been absolutely knockout, beautiful. It's been fantastic. And when you're looking at that weekly chart, there's not really a flaw in the weekly chart. It's been very, very consistent. When you're looking at the daily chart, that's not necessarily the case. And over the course of the months of late June all the way to mid-September, we were dealing with fading price action, lack of momentum, lack of trend, a lot of shaky up and down price action. Something occurred in mid-September, and we don't need to tell the causation of that, but that broke out. We broke out of that level. And in the newsletter that week, I called that wave one of the beginning point of the new trend. And so over the course of the last 3, 4 weeks in the market, we've been at Tactical Trading, been discussing this as wave one. It's been a really good momentum environment. Indicators confirmed that breakout, and it did absolutely nothing wrong, not one thing wrong in this entire saga of that upward movement in price. And so fast forward to right now. Right now, this week in the newsletter, I decided to write about the depth of the retracement because this is the first pullback within the backdrop of the new developing trend. And you could be going into what I would call wave three of this fractal trend, according to Elliott wave, meaning that it's just a trend within the backdrop of that primary trend. And so we're navigating this pullback scenario, which is the corrective wave two. And what we found last week, Mark, is that the 20 period moving average played out as the support level, both on an intraday perspective as well as the daily perspective. And that just so happened to come into that 38.2% retracement as well. And so when you're going through what I call the depth of the retracement, and that's what the article in the newsletter was all about, is teaching our community how to navigate these pullbacks, how to truly navigate these pullbacks from the technical pullback story on the daily chart to the support catalyst on the daily chart to the intraday analysis that you need to see to look at that pivot formation through the intraday side of the equation. And so for me, when you're looking at the S&P 500, when you're looking at the Nasdaq, when you're looking at the Dow Jones, when you're looking at the Russell 2000, regardless of the index, the important part is there's a moment in every retracement where it's no longer a retracement, where you see it through the lens of something else. And oftentimes we describe that through the depth of the retracement and ultimately down to that 61% level and the 50 period moving average against the pullback analysis. But that really wasn't my thought this week, Mark. It wasn't my analysis going into this week that we should be very patiently waiting on a deep retracement here. And the reason I said that and the reason I believe that is because if this pivot fails, ultimately in the depth of the retracement, you're going to see support violations. You're going to see the 9 EMA violate to get to a standard. You're going to see the 20 SMA violate to get down to the deeper level. There's 3 stages of the depth. You got shallow, you got standard, and you got deep. That's how you navigate the pullback levels. But regardless of how you categorize it as a shallow, a standard, or a deep retracement, there's going to be a point in that retracement where you see it differently, where it's no longer just a retracement and it's something else. And to
Yeah.
me, go ahead real quick.
No, and that's the thing, because Frank and I, when we were talking about this on the lounge, it's like, all right, we have our higher low. You came down to the 20, it bounced. All systems go on a standard retracement with confirmation.
Oh, yeah.
And if we keep going up, we'll look back.
It's a good
Now,
look for some
if
traders.
that, and as long as that story remains true, right, it's all systems go on a bull, shutdown headlines
100%.
or not. Now,
100%.
now, if that story changes, and that's what I'm interested
And
in, is
that's
if the
but that's
story
the key
changes.
point in the retracement, because in a standardized pullback scenario, according to Elliott Wave, and when you're tracking those corrective retracements, we're going to track those three levels, and at each level you look for certain patterns, and in each level you look for certain confirmation. But once again, coming back to the primary point here, if you come underneath that 20 period moving average mark due to shutdown noise, labor noise, whatever noise,
Whatever it may be.
right? If you break that pivot, are you as willing to entertain the pullback through the lens of a bullish retracement as you were if as it came down to the 20 period moving average?
No,
And my answer would be no. And
no.
the reason being, it's not just because you violate the 20, it's the end of the trend. That's not trending analysis. It would still be a pullback mark. But the problem, if you break that pivot after confirmation, is it filthies up the joint.
It
It,
fills
it,
it
it
up.
just, it gets really dirty. It gets really dirty because volatility ensues, the market pukes up a little bit, and you got to clean up that joint. And the problem is, we're only 2 weeks in front of third quarter reporting earnings, which means the market doesn't have too much time to digest a further pullback. The market doesn't have too much time to digest too much volatility. The market doesn't have. So my general point is, when you look at the ES and you break that 20 period moving average, you break that pivot, you're not going to be as actively involved in navigating the pullback as you otherwise would be, given the fact that we have earnings season knocking on the door. That's number one. Number two, when you go look at the other indexes, the NASDAQ could give up a little bit and still work out just fine, because the NASDAQ is the ultimate leader of the wave right now. It is the NASDAQ that is leading the charge in this current trend. Well, that still would look pretty good even in a little bit of a deeper pullback. So it's not the exact same as the ES. On the Russell 2000, I'm sorry, Mark, you break pivot, you break 2400, even though you could legitimately argue you're still in a bullish uptrend, you're still looking for a higher level of support. Do you want anything to do with the Russell
Nope.
2000 if it comes?
It's one of those situations, even as a conservative credit trader, in that scenario, if this holds, all system go. If it doesn't and it does what you say, I'm like, all right, I'll see you at the earliest in 2 weeks after I get
Okay.
a multi-week bottoming pattern.
And on the Dow Jones, if it breaks the 20, you're also simultaneously breaking the breakout level, which means you're no longer breaking out. And so in the Nasdaq, you would still look fairly decent from a pure technical perspective. In the ES, it would dirty up the joint a little bit. In the YM and the RTY, the cyclical indexes, if they give up their pivots, they're no longer bullish trends. And so it's one of those situations where, and I detailed this in general in the newsletter, but it's one of those things where I'm just like, the market has to pivot here for the bulls. Like,
Yeah.
my confidence in the market with this pivot is high. If this pivot gives, I kind of feel like the next trend is not going to establish itself until we start getting into the heart of earnings season. And so I just feel like the technical conversation here is vitally important to understand.
Yeah, no, it always becomes, because, obviously tech looks, gradual, not even gradually or incrementally, it looks better than other things. It has for a while, right? Did on the breakout, has at every stage. And Matt, this is where, like, when I gravitate towards where I want to play, there's a couple areas, tech, obviously. And part of that is, and we're going to talk about this with the shutdown here in a second, is it doesn't seem to succumb to the good news is bad news, whatever the flavor of the day is, right? We've seen strong economic data on Thursday, send small caps and everything else down.
Mhm.
Tech, a little bit different. What did tech do on Thursday? Tech didn't care, right? Tech didn't care about that. Good news is bad news.
Hammer
It,
candle on Friday.
it's trading on other things. And Matt, don't look now, but the economic data isn't too shabby, right? Atlanta now
GDP report
GDP.
last week was great.
Atlanta now GDP. I don't know if you saw this because we didn't go over it together. They did their third quarter. I think they jacked it up to like 3.7 for the third quarter, right? So Like, we had a really strong
Why are
quarter
we
on
talking about
GDP.
cutting rates if we're 3.6, 3.8, and
Well,
3.3 on
and that
the
is the
quarter?
conversation the market might
Like,
have.
what are
UBS,
we doing?
Swiss Bank
Like,
UBS was out with a note
let's
today.
fix that stagflation problem. Let the inflation come out of it. And just focus on growth, baby.
Yeah,
Um,
like
those are good GDP numbers. The one that came in on the final was it was expected to come in at 3.3 and it came in at 3.8. That was absolutely
and
fantastic.
so when I see the small caps and some of these others trade on good news and not sell off, then I'll be a lot more interested. I have a feeling we're going to get some good economic news. We'll see if that trickles over to the labor. It doesn't mean we're not going to get a cut in October, but it could put some cold water on cuts after that, right? Fed speak has been very hawkish recently, emphasizing that. Tech, I don't have to worry about these, man. I don't have to worry about these with utilities either.
I would have to see sizable data to get me off the fact that I believe the Fed's going to cut 2 times and alleviate the restrictive territory of the interest rate, which I've been having an opinion of since about April.
Yeah, well, and the market and what have small caps done since the Fed cut? They've been done nothing. Right?
Mm.
I just like other areas, utilities, obviously tech, feel like they have their own little areas. And then, of course, gold feels like it's made for every moment mankind has ever, decided to create in 2023. Another up day, another power day, another break of a high base, another secondary pattern. And Matt, gold, silver, bedrocks at tackle trading for many years. And I got to give you a little pat on the back, Matt. You said that this was going to go to all-time highs many, many, many candles ago. You said that's what the market is stiffing out. I think
Dude,
you
that
are even surprised at the
I
speed
said
in
that at
which.
$30. I
Yeah.
said that at $32. I said that at $34. I
But
said that
are you surprised by the
at $30.
speed in
I
which
said
this is
that at
occurring?
$40. I said that at $42. I said that at 44. And I'll say it at 47, 41. We're hitting the all-time high. There's a magnet out there. In fact, yesterday in the future stream, Mark, I asked the team, I was like, all right, guys, I got a question for you. Does silver hit that all-time high this week, this month, this year? But there ain't a fourth option here. It's hitting that all-time high. And I might be wrong. It might hit it tomorrow.
Yeah. Like, are you surprised by the speed of which? Because you're not
No, I'm
surprised with
not.
the
Of course I'm
destination.
not. The collective world has lost their fiscal conservative mind. Of course I'm not. No, no.
Oh.
Gold and commodities are calling out the craziness and nonsenseless
Well, and I have a feeling crypto is going to join that.
economic policies of the world right now. And so, no, I'm not
Yeah, I
surprised.
have a feeling crypto is going to join that calling out brigade sooner than later. This is on Bitcoin. This is a technical pattern that has been in flux, to say the least, for a long time. Matt, I have a very simple philosophy in modern markets. It might be my number one anchoring philosophy. When something wants to sell in modern markets, it sells. And when it stops selling, when it
It
has
rips
an
the band-aid off big time.
because it had an excuse heading into the weekend, you were at a support level, you'd had a nasty week, right? That's when something wants to get punished. Markets punish in modern markets, they just do. That wasn't the mood of crypto today. Certainly wasn't the mood of Bitcoin. Power candle, something that I sold credit on today, something I plan on being involved. It could quickly become one of my favorite areas of the market. And one of the things I loved today was the relative strength on the intraday chart. We saw stocks gap up and then give back a lot of those gains by the end of the day. Things that I saw relative strength in today, such as utilities and certainly crypto, some select stocks. That really was like, oh, that's what the market really likes. Everything parties, and then let's give up the gains. But what didn't? Crypto didn't. I think that's telling heading into whatever this shutdown nonsense is.
Uh, yeah, I mean, I don't have an opinion on the daily chart, to be perfectly honest with you yet.
It's
It's
because you
still,
need to go to church.
maybe I need to go to church and swear to the altar of all things crypto like I
You
do.
do.
Or maybe I can just pull up the gold chart again and say I'm perfectly fine.
No,
I'm not sure I need Bitcoin when I have gold. Like when Bitcoin does this degree of consistency, you can talk your go to church. I go to church every single day to the church of to the church of gold. Like every single day, we talk about gold. We deal with gold. We deal with it on every single time frame. And so the only time frame I really have an opinion on Bitcoin, and I certainly do appreciate. I don't cheer against Bitcoin. I just wanted to sell off so I could add
They're
that.
not getting it. I don't think
I keep asking for that sell off, and I
it's
keep
not
getting
happening.
no.
You had your chance. I think
I,
it's
I
gone.
I keep asking for it. There's no doubt
You
about
better
that.
hope for a red candle tomorrow. I know
I
that.
got an opinion on the intraday side of the equation, but that's about it as of right now. Like it's certainly V-shaped recovery on that drop. Now let's see how it can handle a breakout mark.
And that's been the struggle with Bitcoin for about a month and a
Okay,
half.
well, wake me wake me up when we get a momentum environment on the daily chart above a breakout. Okay,
Okay, so
recovering from a low price. Yeah,
listen, us believers,
yeah.
we get you there, and then you momentum traders can take it from there. But I have a feeling we're going to get you there.
Listen, I
Um,
do have an opinion on the day trading side at the 115 level, but to me, like I still personally, and don't get me wrong, I'm seeing the lift off here today that you are, but that lift off on Ethereum, for example, I know you were talking Bitcoin, but Mark, you're just coming into the 50 period moving average. A doji tomorrow and a downward movement in price would get blasted.
yeah,
So
no, this is
I
not a
feel
shove the
like
chips in
the
day.
trader in me, I feel like can be a little bit patient here, honestly. And maybe it's because gold has been so good, right? Maybe that's what's kind of impacted my lack of desire to entertain anything on the crypto space recently. But also, like, show me a great pattern. Like, show me a great pattern. I'm a technician. Show me a great pattern, and I just haven't seen it yet. And so I'm more than willing to entertain these conversations, Chucky, but they got to come to a proper conclusion. I'm with you on the fundamental side of it, but if you don't have a technical edge, I can't see things.
And
And
the one
so
thing I'm saying is the second you hear Matt Justice talk about that technical edge, get ready to put some money to work if you are
listen, it's
conservatively positioned.
listen, I agree with Linda.
Because
She's
Matt, yeah,
places.
Matt, yeah,
And I'll hunt patterns. Like I will hunt patterns. I will allow them to develop, and I have the patience of a Tibetan monk when it comes to pattern development because it is patterns that determine probability. And right now on Bitcoin, you're in a neutral situation. Right now in Ethereum, you're in a short-term bearish downtrend with the bearish retracement. And so, like, is it excitable for a big green candle in a bearish retracement? No, to be honest with you. There
listen, I'm excited. I expected my Bitcoin on a Monday to be down 2-3%. I was up
No,
four
no,
and a
I
half.
listen, I'm not trying to talk it down at all, like at all. I'm like, congratulations on that. What I'm suggesting is that's step one for the directional trader. Like they need to see this story come to a proper conclusion. And with Ethereum, I personally would like to see another leg down here. And the reason being, Mark, is if you think about Elliott wave theory, and you know I'm an Elliott wave guy, well, at the end of a trend, you entertain an ABC cycle, which is nothing but a short-term downtrend.
I hope we do. I
Well,
hope we do. Like I do
okay,
just for the long
okay,
term.
I'll draw it for you. A, B, C, double bottom,
Uh,
glory.
that would be
So,
glorious.
so if it ends up like that, you got me. I will be in Bitcoin, Ethereum, crypto church, and I'll be the guy at the top, and I'll be singing and dancing. I'll do it all. I'll do it all. I'm just saying, give me a clean technical edge first.
Yeah. Also, and we don't talk about it every week. I like my, give me the utility chart real quick, and then we're going to talk shutdown. The things I find myself liking the most
Utility
are
upgrade last week, by the way.
tech, utilities, crypto, and of course, precious metals because it's required by any sensible law that you ascribe to.
Listen, 10 years ago, when I would talk silver and gold, like people would look at me with like, "Ooh, you're a gold bug,"
Yeah, that's
and now they look at me like, "Teach me, please."
yeah.
And it's just like, listen, I gold's going to be around longer than I've been around. So, yeah, you're going to want a part of it.
You are
I
indeed.
think it's absolutely at this point. I mean, you got to be a blind squirrel not to have something in gold right now.
You got to even like you just whenever you have a secondary pattern trigger, you have to do something that day. Especially if you're light. And I find myself lighter than I would like. You know, conservative traders tend to get blown out. But listen, gold, Bitcoin, shutdown, stocks, a lot of headlines in the next couple of days. Let's talk about the shutdown. Some of the leaders, Matt, of both parties met in the White House, uh, and JD Vance left that meeting, said we're heading for a shutdown, right? Polymarket basically putting it not as a certainty, but a really high degree of probability. And that shutdown would take effect tomorrow night. And I don't really want to talk about the politics of it too much, right? Because Democrats want one thing. It could be political brinks, just political posturing. Republicans, want us just to move ahead, right? But what I
Democrats
do,
want to make the Obama subsidies of the ACA permanent, and Republicans want to punt. Like that's the only issue that's really being discussed. This is just a clean CR being passed for the next 3 months to fund the government through the end of the year. And so there's not a massive political argument here. There's not like a big, beautiful bill that's being dialed in here. It's really just that one issue on the healthcare subsidies from the ACA, and we'll see. And from what I gather, Republicans don't even want to see those go away. Like I heard Mike Johnson on CNN yesterday talk about how that they just don't feel that's a discussion for the here and now, and they're willing to negotiate on that by the end of the year. Democrats obviously look at the situation and they're like, no, we don't have much leverage, and so we're going to press our leverage when we have it. And they have a little bit of it right now because of the Senate. You need 60 votes in the Senate. Right now, I think they got 55 right now in the Senate. A couple of Democrats have vowed to vote against any government shutdown, and so it's certainly going to be interesting. But this is not like a detailed discussion and mind map about what the Republicans and Democrats are arguing about. It's really just about the ACA subsidies from healthcare.
yeah, and I believe, one of the things, the reasons I thought that a shutdown would occur, and I was able to lay odds on Polymarket, is something you told me about Schumer, right? Because if you remember your political past, Schumer got a lot of heat earlier this year from within his own party
For
when he
agreeing on this exact
for
same
agreeing
CR.
on this exact thing, and he got a lot of heat, like Schumer, we don't want you in our party type heat. And so, in talking to you, I was like, well, Schumer at least has to make a appearance, a stand that he is fighting, right? Or else he could get primaried and Chuck
It
Schumer could
doesn't,
be a footnote in
it
history,
doesn't matter.
sooner than later, right?
He
Sooner
is
than
a footnote in history sooner than later. Like there's nothing that he will do in this
in
Congress
Chuck Schumer's head,
over.
there
It
is.
doesn't matter. It doesn't matter. There's not one thing Chuck Schumer can do to change what's going to happen here. Nothing.
Well, but there is, if in his head he thinks that maybe if he fights hard, right? And so, like, JD
That's
Vance
crazy talk.
probably right.
That's crazy talk to have something in your head that has no viable path
Ah,
in the world. Like
oh,
like
modern politicians. You
sorry.
just describe a lot of them.
Yeah.
But one of the things, we're going to get a lot of headlines on CNBC. We're going to get a lot of headlines on Market Watch. We're going to get a lot of headlines out of Reuters and Bloomberg on the government shutdown,
Oh, it's gonna be everywhere. Yeah.
especially if it lasts more than a few days. And so, getting ahead of that, we wanted to talk briefly here on the podcast and in the newsletter this past weekend for our pro members. We laid out, right, what does this mean from a market standpoint, right? Because we have no shortage of data points since 1980 when shutdowns kind of started becoming a thing. I think there's been something like a several dozen,
Since the
right?
80s, since like 81, there's been like
Yeah,
40.
there's been, and many of those only last a couple days, right? 2 days, 3 days,
Shut it
one
down
day,
on a Friday, open it up on a Monday morning. It's a government
you
shutdown.
know.
Yep.
But we have had a couple larger ones that have occurred, right? 2013, 2020. And generally, whether it is a 1 day, a 2 day, or a longer one, Matt, these have been extremely bullish events when you look at the totality of them. The one in 2020,
Yeah, but couldn't you describe every single aspect of the market since it always goes higher as a bullish catalyst eventually?
yes, you
I want
could
to
in this.
describe a clipping of support and volatility to the downside of 7%, a nothing burger.
You know,
Personally, I
except
want to describe it like that.
and this is and I guess I look by the time the shutdown is over, right? And so like
And I
so let's
look at it, if you blow up this technical pattern, we're gonna have some discussions.
and
Like,
that is the real debate, I guess, heading into this week on the shutdown. There's a couple facts we know. One, that if the government shutdowns, that's not 100% certainty yet. Eventually, it will reopen, right? Eventually, it will reopen, right? Can we all agree on that basic fact that the U.S. government is not going to shut down forever?
100%.
Yes, it's not going to shut down forever. Now, we don't know the technical volatility that might occur if this lasts more than a day or two. Now,
Mhm.
I think we have a pretty good idea that if, the market, if the government shuts down on a Tuesday night and reopens on Wednesday or Thursday or Friday, probably going to get a big rally day on that, all things being equal. But we don't if it lasts
Oh, that would be
longer.
beautiful. Are you telling me we get a government shutdown Tuesday night? It shuts down for Wednesday, reopens up Thursday, Friday, and we get a power candle?
you know,
Like that. That means the pattern didn't break and it confirmed that we are giddy up.
and that would be very nice. You take that one thing, but one of the things, and so if we don't get any volatility, Matt, no harm, no foul in prepping for what might occur with a shutdown. It's just a continuation of technicals, right? It's just a continuation of playing the trend, right? And so if there is no negative reaction, well, everything you talked about in the technical section to the start of the podcast applies, right? Doesn't prohibit me from taking a trade today or selling credit or whatever, nor will it tomorrow, as
I
long
didn't
as
think
the
about this shutdown today when I was doing
yep.
my routine.
I thought about, oh, utilities relative strength. Let me start some utilities. Like, so as a trader, I am not giving this any real reverence. It will only be if you get volatility that violates, right? The patterns that you
Well,
discussed.
so far, okay, just so far, go with me on this.
Mhm.
We had the futures open yesterday where there was a lot of chatter about a hypothetical government shutdown this week, right?
Correct.
Okay.
Yeah, this has not been a black
Hold
swan.
on. Hold on. In the futures yesterday, we had one of the most consistent overnight sessions we have had in weeks. Yesterday.
Yep.
So, despite the government shutdown and all the chitter chatter around that, we had an extremely consistent overnight session. And extremely, no volatility, no sell, like nothing. Not until we got into Europe. And even on that volatility we saw today, Mark, I was hearing some complaints about the volatility about the market not going up today. I'm like, can we slow down just a little bit? That was a 50% Fibonacci pullback on the intraday move. That was it. That's all we got today. And immediately upon that 50% Fibonacci number, you know what the market started doing? Immediately started reversing. Further evidence that the market has not cared yet. When did JD Vance come out and say a shutdown's happening?
About an hour right after the market closed today.
Okay, so about an hour after the market closes. Market closes right here. JD Vance comes out right over here. Mark, JD Vance saying we're going to have a government shutdown was not even enough to break an intraday 5-minute support level. It just pulled back against the neutrality that was happening coming into the close. And so I have not seen any evidence of the market being concerned yet of the the hypothetical shutdown, which does have close to a 90% probability at this point. And somebody might say, but man, what about gold and silver and everything? Like what they're skyrocketing today. I'm like, yeah, you just said another day that ends in Y. That's what happens with gold and silver in this economic environment
Gold
where
and silver has not been
like,
front running the shutdown for three and
no,
a half
gold
weeks.
didn't move today because of the shutdown.
You
Are you
know,
kidding me? The ES was skyrocketing on the overnight session. Guess what gold was doing on the overnight session? The same thing. And so, no, it's these are running on different themes right now. By the way, just by the way, just right now, very second, On the reopen, oh man, look what gold's doing on the
Yeah, that's a
intraday mark. Oh, that's beautiful. Oh, that's so beautiful. Look at that hourly base. Oh my goodness, that is so good. You think gold's run is done, guys? You get intraday consolidation before you have to make a decision. And so I just really haven't seen anything on the government side of the equation impact. And when I look at these things historically, and I thought you had a beautiful write up in the newsletter this weekend. When I look at these things historically, Mark, yeah, the 2013 case study certainly saw some volatility to the downside, but it was after a week of the
yes,
government
and
already being
that's an important point. Is that
it
the
took some time.
initial reaction? It took a full week, which means you had
Yeah.
to sit through a weekend in 2013, where
Hmm.
most shutdowns you do not have to do that. You did
No,
not have to do that.
no. And in 2018, it was already going down. Like I don't feel like you can even look at the government shutdown in 2018 because we were having a PPP plunge protection team type moment where like the Fed through Mnuchin had to come out and save the day and all that jazz. There was other things happening in 2018. And so even in the scenarios, and again, we've had about 40 scenarios since 1981, even in the scenarios where we had prolonged shutdowns, the longest being 35 days, by the way, it took a good 5, 6 days before the market's like, you guys aren't going to get your stuff together, are you? Right. The market for like the first few days basically says, this is just a bunch of politicians yelling at each other.
Yep.
They're going to get the job done. Right. But as it lingers, it creates that uncertainty and it gets people to start thinking. And when people are thinking, they're not acting. And that's a problem for the
And
market.
that is the biggest thing in the technical situation we're in. I think you just summarized it as well, right? And I think this applies as much to small caps and other things outside of tech, right? It's like, because, this is supposed to be labor market week, right? Labor market, last time I checked, was a huge, massive, storyline for the Fed and in the market itself. But if you're not going to get labor market data this week, which would occur if the shutdown, right? Probably not getting non-farm payrolls on Friday, right? That data point
The
takes out,
government story came out and said they're not getting that data.
and so like if that data is taken back, right, trades that are dependent on kind of the rate cut theme, right, you might get traders to think, right, which in an uptrend you really don't want. You want
Well,
traders acting, not thinking, right?
you don't want
And
traders thinking. The more I think, the less I like things. Like I'm like, well, did you see that? Did you see this? What about that pivot? What about that pivot? What about this news story? What about that? Right? You want to read and react. You want to read and react. And the more you think, the less you act. But I would say also one last point on the shutdown side, it only becomes an issue once uncertainty builds. Uncertainty only builds if nothing gets done in the first week after the shutdown, and that would probably just be 3 days here. And so, because you got the weekend on Saturday, so you got 3 market days for them to figure something out before I feel like it becomes more than just a political story. But at first, I even think like the very term government shutdown is not the proper term to apply to this condition. For example, Mark, not everything in the government shuts down. Like,
that's true.
I'll give you an example. So let's say you collect Social Security. Can you still get Social Security in a government shutdown?
Yes, you can.
Yes, you can. But can you apply for a new Social
No,
Security?
you cannot.
That's the difference, right? And so, like, I had somebody today is like, hey, man, I'm going to be gone in like Europe for the next week. When I come back, is there going to be a TSA agent there to
Yes, there
allow
will be.
me back into the country? And I'm like, oh man, we don't teach our. Yes, you will be able to get through immigration when you come back. Yes, there will be TS agents. So, like when they talk about the government shutting down, like the government really doesn't kind of shut down.
Yeah, no, essential services, right?
Yeah.
Those checks, they all get sent out. Economic data, that's not essential.
Uh,
And one might argue that's not been essential for a while in today's make-believe
Especially on
society.
the labor market side, everybody in the government's like, maybe we just kind of let this month go. Like,
So I have a feeling things are going to do for the next little bit. Like they're going to trade. If you get a prolonged one, you could see, right? But I'm going to have to see a support level. I'm heading into this shutdown, Matt. I'm going to have to see the support levels give out, and I'm assuming they're not. If they do, I'll react. But if
got
I think
about 60 points to play with here. And that to me is by far the most important part of this conversation. Does this pivot hold? And if this pivot holds, we're absolutely entertaining wave three at tackle trading going into earnings season.
yeah, and that I'm assuming, until I
We
see it
got
not
2
hold.
weeks before earnings season, and I'm hoping we get a great leg here.
Now on small caps, I don't know.
I
I
could
don't know
care
if it will.
less. We're
I
talking
don't
the
know if it will, but I got plenty of techie stuff
who
and
cares about
crypto
small
stuff,
caps? Why are you so obsessed with small
precious.
caps? You want to talk about small caps so much when you don't even want to make any trades on
I
it.
don't want to make a single trade in
Is
small
it
caps.
like
No.
the
Well,
crazy
when I say small
trader?
caps, I'm including materials and
Arc?
the Dow and lots of other crap, that doesn't interest me at all. But
Okay,
yeah,
move on.
yeah. And
Yeah.
so, anyways, let's move on. And I have no small caps in stock it or drop it. So, are you shocked by that? But I do have Oracle, and this is an interesting one. Stock it or drop it. I throw out some ticker symbols to Matt, and he says stock it or drop it. I find the Oracle one really interesting, Matt, and it's going to be a subject that we'll talk more about vendor financing. That is kind of like we're seeing some big numbers out of Oracle and some big numbers out of Nvidia, and how OpenAI and Oracle's basically given OpenAI money to rebuy kind of some vendor financing. You've had some you had one bank last week, Matt, say screw it, this is all make believe, we don't believe it, issued a sell rating on Oracle. It was a fantastic guide. It's given a lot of that back and not trading well since earnings, Matt. Stock it or drop at Oracle.
Well, the and let's go back to that earnings very quickly on Oracle. The the one thing that stood out to everybody tracking Oracle on earnings day with the gap out had nothing to do with EPS, which contracted from last quarter and officially missed. Had nothing to do with revenue, which officially missed as well. It was and on guidance, Mark, guidance was not, oh my goodness, watch out. Like it was basically nothing. It was the secondary news that occurred with OpenAI pledging $300 billion to Oracle. And then on top of that, like add it all up for AI services downstream was right $420 billion, which was like, oh my goodness. Oh my goodness. Did you see that number? Well, after a couple weeks of kind of seeing this play out a little bit and being very open-minded to the conversation, the ultimate question is, where's OpenAI going to get that 300 billion from? OpenAI doesn't have
It
300
doesn't
billion.
have 300 billion.
They don't have 300
It's going
billion
to
to
get it from Oracle.
people, which means they have to get it from somebody else to pay to somebody else. And so it's almost like they're paying Oracle. Oracle pays Nvidia. Nvidia pays Open, and it's just this rotation of money that's going, and it's not anything new. And so there was a little bit of concern on that side of the
Sounds
equation.
like the Fed and all of the bank
It does
glitches.
really sound like something Goldman Sachs would do in some Malaysian country 15 years ago. Yes, that's exactly what it sounds like. But on top of that, and again, I'm very open to trading Oracle, but I'm thinking about this from the longer term purview. Oracle has a PE ratio of 65 right now. It's got a forward PE ratio of 35. It's got a PEG ratio of 2.8. The tech sector right now has a PE ratio of 42, forward 27, and a PEG of 2, which means on every single valuation metric in comparison to the sector itself, Oracle is overvalued. Oracle is overextended technically. Oracle is overvalued fundamentally. And this is after a massive run. Now, I am familiar with the bank you mentioned. They said that Oracle was in line for a 40% drop. I think that's ambitious on a 40%.
Yeah, that was like you got to give old Rothschild and
Yeah, I
whoever
thought
they
that was
were.
ambitious.
Like, like when you call for a high flyer to drop 40%, you're
Yeah,
planting a flag.
not that's probably not a flag that, but Mark, down to 250, would you be shocked? Down to 220, would you be shocked? Like,
Gap fill
so,
the earnings. I want to be.
and a gap fill to 260? Like, no. And so I'm gonna have to drop it just because I think Oracle has to move down further before you get into any entertaining technical or fundamental condition. And so the volatility at the top is never something I'm going to love. That's enough to get me off the short term. And then I do have some concerns on the valuation side of the equation. So is could it get on a watch list? Wait on pattern development? Absolutely. Could it be a technical story? Absolutely. But I'm gonna have to drop it based on the fundamentals. Based on the fundamentals, just I don't love that valuation compared against the sector.
Yeah, I know, and and there's been a lot of nitpicking, bearish tech news for like 2.5 months, right? This little nitpick here. Remember that MIT paper that they tried to cite for
Yeah,
24 hours, right? And so there's been all this. This is the first one, Matt, where I'm like, vendor financing. It just smells, even like it just
not
smells.
real.
Like, yeah, and that's the thing. It's like
You
I
know,
don't.
there's something there, but you know it's not $300 billion,
Yeah, and so
right?
it's like,
You know it's something there, but they're not bringing in $420 billion. Maybe it's 280. Maybe it's
and when you have such a magnificent theme like AI has been the last couple of years, you don't want these type of stories. It does. They don't. You don't need them,
you
right?
don't need the pledging of the hypothetical revenue downstream.
Yeah,
No,
it
you
feels
don't.
like
No,
I
you
think
don't.
Oracle might get punished here.
So yeah, it's a drop it for me, but only on the longer term side, like a gap fill to 260 and a king's bed at 260 would interest me.
Yeah. Now let's go to Nvidia, who helped spur all of these profits in AI many years ago, involved in its own, but trading much differently, right? Trading much differently than Oracle because you didn't have a massive gap up of like 8,000% and all of that. Nvidia, have their own deal with OpenAI. They made the news last week. It's been very resilient, Matt. You're dealing with a very clean breakout level. It's hard to take your eyes away from this one. Stock it or drop it, Nvidia.
I think you've asked me 4 times on Nvidia. It's always a stock, and it's always going to be a stock, and until something fundamentally changes. And whereas everybody's talking about Oracle these days and what they did, Nvidia and quietly, Mark, remember that tech PE ratio of 42 and the tech
Yeah,
forward at 28 and the peg
it's
at
just a
2.
different story.
When you look at Nvidia, for example, PE ratio, let's go to FinViz and let's take a look at the nitty gritty here on the fundamental side of FinViz. So let's just go Nvidia there. Let's take a quick peek. Okay, so the forward here is 28, peg ratio 1.4. And so you basically got a better peg, equal PE ratio. The PE ratio is better than Oracle, but it's slightly higher, elevated than the sector itself. Forward PE ratio is still perfectly fine. Amazingly, you still have a better valuation argument than 70% of the tech space, I would say.
And I think that like when tech, that's just and Matt, you have been on this. I can remember like since March of 2024 when valuation in Nvidia started hitting headlines, right?
Oh yeah,
And I remember you had a coach's show where you're like, come on, it's not overvalued. And here, let me show you
said it
why.
for years.
And you have been dead right. And this has been a
Well,
classic example of
Mark,
valuation.
people judge overvalued things and fundamental stuff by, oh my goodness, have you seen how much Nvidia's went up in the last few years? Oh yeah, 10 bagger. Ooh, ooh. Well, so is their revenue. So is
Yeah,
their
like
EPS. Like, and until those stories change, like, no, just ride the wave, baby. I do think Nvidia is one of those things. It's absolutely a stock it for me on the short term, long term. And on the short term specifically, I think this breakout has to be viewed. This is a really clean potential breakout. I would love to see it get dialed in, meaning high base going into it, but it's a very clean breakout channel, and the weekly chart looks absolutely fantastic at this point. Not a flaw. Not a flaw. Let's see if we can get that breakout. Breakout looks strong.
Yeah. Next one, Apple. Some individual news. Now, Matt, you are like among many things. You are my resident Apple expert. You are always dialed into the news and the flow and the narratives on Apple, right? Many stocks you'll go with tech. You know your Apple. They had some interesting news on Apple, Matt. Give that to us and stock it or drop it.
Listen, Apple can't develop anything new, but they are the best in the world at refurbishing all their old tech to sell it to new people. And they're going to do a lot of it with the iPhone 17. That's all I'm going to say. I'm going to stock it. I think they're going to see increased sales on the refurbished technology, and people are going to be happy about it.
Okay. That's a that made me laugh. They're good at what they're good at. They're good at growing that services revenue.
Uh-huh. You got to fix
Just,
their old tech that doesn't work.
yeah.
I
All
can't.
right.
Yet. I think it's a great pattern, by the way. I do
Let's
think they will see additional sales on the iPhone 17. I think that's an underreported story right now. I also believe this high base looks pretty good and is just waiting on the 9 EMA to catch up.
Chinese tech's been on fire. Give me Baba. While Apple might not be able to innovate anything, Alibaba is doing their best to mimic every capex spend trick that U.S. companies have done for the last couple of years. This has been a monster run. Tech in general in China through you can always monitor that through KWeb. Been on a monster run. I get more questions. This is the result of an upturn. I get more questions on Chinese tech than I have in the last 15, 20 years combined. I swear. Stock or drop at Alibaba.
I'm gonna drop it.
Okay.
I'm gonna drop it. Something stands out to me on this chart. Not just this year, but over the course of the last few years. Baba's had a couple runs. Baba's runs never last. Ever. Ever. And they don't just retrace. They give back a healthy percentage of that pump. And so 58 up to 120 moves up 60 points, gives back more than half. Nice little run up here, goes from 72 to 118, moves up 50 points. This one here, 80 up to 146, moved up 65 points. So 50 to 65 is kind of the level there. From the current run right here, 117 to 181 mark, that is 64 points. That is at the tippity top of the historical pattern of how far Baba can pump before they run out of buyers. And I kind of feel like I have no desire to chase that trend in any capacity. And I'll never pick the hyperscalers out of China or the US. And so I'm gonna say stock it. I think I'll be watching Baba for a potential reversal.
Now I know the next one's a stock it
That
because
squeaks down the road, by the way. You never go against this
oh
trend.
yeah,
That is ridiculously
that
bold.
goes without
I
saying,
just think
but
you're getting into elevated levels where it's like, okay, how far can this bad boy really run?
all right. Next one I know is the stock because you pitched on Trade Masters. I loved your analysis. You didn't catch that on Trade Masters. I wanted you to give a brief recap. Matt, you have been on fire on Trade Masters. We
I've
host
had
that
some good
every
picks on
Wednesday.
Trade Masters.
You've made people money. You tune into Trade Masters on Wednesday at 6 p.m. Eastern on this YouTube channel.
If
You
you
have
love
made
great technical backdrops that are the best in the market, you'll like Trade Masters. Yeah.
and you brought up some analysis on Walmart that wasn't in your normal technical wheelhouse. It was a little different. It was kind of like anyway, share it with us.
I was seeing some slight extension on the Nasdaq, and I was seeing some slight extension on some of the leaders in the Nasdaq, such as Google, such as there was a few I was anchoring against. Apple was one of them. By the way, Apple had some really good secondary pattern development, and I just felt like if there was going to be a problem in the market, and we were going to see some nastiness in those areas of the market. Walmart could be a benefit. That was number one. Number two, and I think even more importantly, is if you're looking at consumer facing retail stocks, the consumer isn't the strongest they've ever been right now. But hell or high water, recession or sunny skies, whether you love Walmart or whether you hate Walmart, you find yourself at a Walmart in these types of economic environments, I would say, where when affordability is an issue, and affordability crisis is a very real thing for Americans to deal with in general. And then number three, I just kind of feel like the weekly technical story here is extremely compelling. And Walmart hasn't broken out yet, but I talked about Walmart as a potential front runner going into that breakout. The analysis is still there. I think at this point you probably like the breakout of 104 a little bit more in my estimation, but it's kind of that weekly chart's telling a story, and at 104 the weekly chart has an opinion. And if we close above 104, I think the market is sharing its opinion with us. And so I just kind of feel like the weekly chart has a multiple time frame breakout situation looking pretty good. Walmart's absolutely a stocking.
Yeah, listen, I got a couple Kosher's Corner questions before we finish off.
Yeah,
Normally, I would just call it a podcast here because we're up against it. But I thought these questions were very relevant to the material that I knew
I'll
that
be
we
I'll
were
be
going to
quick.
be
I'll be quick.
discussing. All right. So first question: how do traders actually tell the difference between a normal retracement and the start of a real breakdown? I thought that was
Gonna
just
be quick.
you know
Oh, I thought I was going to be quick. Refer to the first session segment that we did here in the pod. But once again, when you're talking about at what point is a market no longer just a retracement, but it's something else,
yeah,
right?
and the thing is, the reason I wanted to bring this question up is because that's always on the back of traders' minds.
Well,
You know,
what I've told people is that when you're navigating breakout like Walmart, right? It's not a there's not a lot of discussion here. Like it either breaks 104 or it doesn't, right? You either get your breakout or you don't. But in a pullback scenario, there's as much art as there is science in a pullback. There's those three levels in that pullback, but again, it's there's a moment in time where there's a certain support level that the market gives, and it's certainly not typically the 38% level. Typically, it's underneath the 50% level, but there's a certain support level gives that you no longer see it as bullish. And I would love to give you a great answer. Oh, if it clips this 61.8% Fibonacci level that equates to the 50 period moving average, then that is no longer a bullish trend. That is 100% accurate what I just said. If you clip deeper retracement and give up the 50 period moving average, you are no longer a bullish trend. But Mark, there are signs that happen before that ultimate conclusion in the depth of the retracement where you're like, nope, that's no longer the same quality of technical backdrop. You give up that support level, shifting volatility, stop punts everywhere. And so to me, it's not a matter of truly understanding what is that one scenario where that stock's no longer bullish. Well, yeah, let's pull up some case studies and I'll tell you the exact number. Or two, come to Tackle Trading, become a pro member, engage in these conversations every single day, enroll in Master Trader so that you can learn how to identify that the same way I do. Because in Master Trader 2 weeks ago, that's exactly what I did for 6 hours. Two sessions, 2 nights, 6 hours. I spent 6 hours teaching the Elliott wave, retracements, the depth of the retracement, pivot action, secondary confirmation, step method, you name it. You name it. That is what I taught, Mark, for 6 hours. And so it's kind of hard for me to answer that question in 60 seconds. But what I would say is see segment number one. We did discuss that. And number two, if you truly, truly, truly want to answer that question, not just have me point to you a singular case study, but answer that question for yourself on every asset class for the rest of your life, come to Master Trader and I'll teach you how to do it.
next one was sent in over the weekend. With companies like Oracle and Micron moving so differently on earnings and AI news, I'm assuming they're referring to Micron selling off on good headlines and Oracle giving back. Their question and their bigger question is, how do you separate short-term noise from a real long-term investment thesis?
Short-term noise is done on a daily chart, and everything you ever evaluate on that daily chart is going to be on the short-term side of the equation. To separate it from the long-term side of the equation, you have to embrace multiple time frame concepts, such as the weekly chart, but also you have to have an understanding of fundamentals here. We talk technicals a lot at Tackle Trading, and in the podcast, we rarely talk on the fundamental side of the equation. Maybe we should do that a little bit more often because that's the tiebreaker there, Mark. You know, it's the valuation, it's the growth. When I put together the Tackle 25, and we're only 2 months away from the next edition of the Tackle 25, mind you, but when I put together the Tackle 25, I don't do it from a technical perspective. I do it from a fundamental perspective. So if you want to understand how to separate the real ones from the fake nonsense, that's a fundamental conversation. That is not a technical conversation. And so I would say embrace two concepts on that one. Number one, embrace the concepts of truly understanding the Warren Buffett school of valuation. Like if you ever anchor to anything on the fundamental side, anchor to the Oracle, the Oracle of Omaha on the fundamental side in assessing valuation. P ratios, forward P ratios, PEG ratios, debt to equity ratios, you name it. And then also start including long-term analysis. Like look at a weekly chart. Don't get just so inundated into what's happening on that daily chart that you lose the forest through the trees. And so always keep your eye on the price. The price is long term. And also, I want you to think about it like this, Mark. If you're thinking about a long-term situation and you want to navigate the noise, Mark, every long-term asset class you should be thinking about how to cash flow on. If you're not thinking about how to cash flow on that asset class, that is not a long-term asset class for you.
Well said, sir. And my final question is for you. Did you have a good time on the podcast today, bro?
I always have a good time on the
All
podcast.
right. Well, then
I
send
always
us
have
out.
a good time on the podcast. I am losing my voice a little bit, and so it's a little bit raspy here today. But I love the podcast. I love our discussions we have every single week on the podcast. I get a tremendous amount of value in the podcast and all of our conversations, quite frankly. And I truly do hope everybody else who watches the podcast this week gets some value out of it as well. And if once again you're looking for a community to call home, one that you can grow with, one that you can learn from, one that will help you out and hold your hand along the way, there's not a better one than the number one rated financial education company in America, and that is Tackle Trading. And the simple reality is the reason we are the number one rated financial education company is because we will be there for you in every single capacity. We eat, sleep, and breathe this stuff. We live with our community every single day in Discord and Zoom and navigating the financial world together. And if any student in our community, any team member in our community needs anything from one of us coaches, we always got each other's back 100% of the time. And so if that interests you and you want to be a part of that and see what it's all about, hit the link in the description below, sign up for a free 15-day trial and come start partaking in the newsletter. Start reading the Traders Report. Get those best watch list candidates every single week in the Traders Report. Get dialed in and know exactly what you're doing as a trader and an investor in the Tackle newsletter every single week. Get in Master Trader. Start doing this the right way. And so yeah, that's how I'm going to wrap it up here this week. And once again, if you need anything, just let us know.
All right. Listen, everyone, have a fantastic week ahead.
Hit that like and share, team.